Hello and welcome to LAT's Weekly Market Insights. A sudden shift in treasuries prompted a slide in equities this week. The S&P index fell as much as 1.6% on Thursday alone, the most it was seen since May. All other indice markets slipped alongside it. This morning, treasuries have halted after an 8-day rally fueled by concerns about global growth and the ever-present threat of the Delta variant of the COVID-19 virus. The pause has provided a chance for indices and risk currencies to recover some of the losses posted throughout the week. However, despite these losses, many of these markets still hold and maintain substantial uptrends. The positive move in equities this morning may well provide more confidence to investors, suggesting this was an inevitable pressure release and correction. Let's not forget the S&P is up 16% this year alone. This positive outlook is still the narrative coming from many of the major institutions, with JP Morgan Asset Management, BlackRock and Morgan Stanley Wealth Management, which together account for some $12 trillion in assets, are among many managers saying global growth is still on track. Despite this, the 10-year Treasury yield does remain on course for one of its biggest weekly slides since June of 2020. In US trading, the 30-year yield broke below 1.9% for the first time since February. Now, as we come on into the charts, we can see here across the board, looking at the major indices, commodity markets, we can see that slide that we saw through the first half of the week, and in line with that also now the bounce back and the recovery that we are seeing today. If we come down to the DAX now, and we'll take this into a slightly longer time frame chart, we'll pop it onto the 4-hour chart, we can see the major uptrend is technically still intact, and we're finding key support that was held back from the 21st of June, and also that previous resistance back from the 5th of April. That bounce back came in line not only with primary support, but also this S1 monthly and S2 weekly pivot points. The challenge here now for the equity markets is we're starting to see secondary biases drift towards a more of a sell signal, as the 50 and the 200 period moving average threaten to cross, providing us with that longer term bearish outlook. If we bring up some of the US markets, we come across the S&P 500, and again we'll bring this out to that longer time frame. We can see the major trend here still intact. But despite closing back down below that 50 period moving average, as of today we are back trading up above that average and also trading above this weekly pivot point. Challenge now for the S&P will be to hold above these levels to see if we can maintain this uptrend. Moving back out now and across to the Dow, we are seeing a very similar scenario. The bigger bounce back coming arguably from the NASDAQ, the tech sector having an incredibly bullish run of late, and trend lines and trends still intact. We can see here on this 4-hour chart, perfect trend line pulling back and being retested here for the 5th time. Again, it's a similar picture to the S&P 500 with that 50 period moving average being broken, but now acting as clear support here as we again maintain and hold above this weekly pivot point. So we come back out now, we're going to take some of these charts back down into the lower time frame. Now we've seen the bounce back from this morning. We've seen that pressure release, we've seen that the hold and the slowdown in those yields. And now when we come across these 30-minute charts, we can start to see the correlation and some of the challenges that are ahead. Looking here towards the Dow, the S&P and the DAX, they are all coming away from key resistance levels. The 200 period moving average acting perfectly as resistance on the S&P, the Dow. If we load the NASDAQ, we'll also see it here. There we are, key resistance in line, not only primary resistance levels, but also that moving average. Coming across to the commodity sector and looking at oil, that risk asset, we're also seeing that 200 period moving average bounce. It's prompted a little pause in this recovery this morning, but we can see the DAX here now bouncing back and rallying up towards that monthly pivot and that moving average again. If we can break through this, it's going to open up a lot more upside potential for these indice markets, and then we may be looking towards seeing a challenge of those highs. The highs here in DAX, looking through the European session, brilliant target levels. We can see that resistance in at that round number of 15,700. So a move through this pivot point, move through some of these moving averages may suggest a movement back up towards these highs. It can be very interesting to see how we close out this week, if these equity markets can hold firm, or if the dead crosses that we are seeing in the S&P, the Dow and the NASDAQ on those 30-minute charts are going to hold true, and that's going to prompt a much larger correction to the downside. As we come across to gold, one of our other major benchmarks for the commodity sector, it's trapped broadly within a range. It's testing the lows down here at 1796, having put a weekly high in at 1820. Since then, it's drifting sideways, indecision amongst the dollar and also indecision amongst the equity markets. A clear move lower could prompt gold to continue to push higher, breaking out of this range and looking for that continuation trade up towards the 1850 round number. So an interesting move this week. Strong sell-offs at the start, prompted by that risk and that fear and that move into safety. But now we're seeing that bounce back to close out the week. All eyes towards now those weekly candles to see what formations we're going to be posting as we come into next week, which is a fairly busy economic calendar, looking again at rate decisions. We're going to start in the Asian session with the RBNZ, the Reserve Bank of New Zealand, posting their rate decision on Tuesday evening. And then we'll come into the Bank of Canada on Wednesday, with the Bank of Japan wrapping things up Thursday night, Friday morning. All eyes towards those. Are they going to take a similarly hawkish stance as the Fed did a few weeks ago? In which case, again, it's going to add increased pressure towards some of these industry markets. All eyes towards that next week. But that's all from us for now. Please do join us same time next week.